Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Formal arrest. Turkey jails Istanbul's mayor on corruption charges in a move which could prevent President Erdogan's main political rival from running in the next elections. Lethal strikes. Israel kills 2 members of Hamas's de facto cabinet in airstrikes on the Gaza Strip as tensions ratchet up in southern Lebanon, testing the fragile ceasefire. And tighter focus. President Trump prepares to announce his wave of April 2nd tariffs, targeting countries which have barriers on U.S. goods, but excluding some nations and blocs. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Happy Monday morning to you if you're just logging on. Plenty to get through this week, but let's just start with the markets as ever. A bit of a positive end to Wall Street on Friday with both the Nasdaq and the S&P ending up in the green, even tracking gains for the week and actually surprisingly outperforming European equities for the first time in a while. So a lot of green on the board on Friday. The handover this morning also quite positive as well. You can see S&P futures tilting up towards a positive, up 0.6%. This, people are saying, is on back of news over the weekend that this so-called April the 2nd Liberation Day is what President Trump is calling it, but Tariff Day essentially is being watered down into a lot more targeted tariffs than what had been initially planned. Remember, it was an initial plan to imply tariffs broadly on all sectors, on all countries all around the world. It seems as though now the plan is being narrowed down to specific sectors and some countries will be exempt. So it's been taken positively by the market. European futures also up 0.2%. Bear in mind today in terms of data, we get PMI manufacturing numbers for both the US and Eurozone. So keep an eye out for the data as it comes through. 10-year yields moving a little bit higher today. We're about 3 basis points higher in the session, getting close to 4.3% again. So we saw a bit of stalling around the 4.2% mark for 10-year treasuries. And then Brent sitting just shy of $72 here, about 0.4% weaker, despite the geopolitical developments that we've been tracking over the last week or so in the region. Switching over, and let me just draw quickly on the handover from the Asian markets. And you can see for the most part, it actually has been quite negative. We have the CSI 300 in China, marginally positive today, but negative signals coming through in the Hang Seng index. So we'll be watching out for earnings later from Tencent, BYD. Obviously, BYD with that supercharger was one of the best performing stocks last week. Nikkei also slipping marginally today. Some disappointing PMI manufacturing data coming through there. Actually, the weakest PMI numbers in over a year. So some weakness on the real economy. And then the Indonesian market continues to underperform. We're down 2.9% today, performing very badly throughout the course of last week as well. And there, investors really concerned about the knock-on effects some of the political decisions are going to have on the state of the economy. And that continues to be a theme playing out in this Indonesian market. In a similar way, we're also watching very closely the political developments in Turkey. Let me just show you the Istanbul Borsa, because we saw the worst week for the Istanbul Bors since the GFC, down 16.6% throughout the course of last week. And this purely on back of the political developments with the detention and then the arrest of the Istanbul mayor, that is President Erdogan's main rival politically, but it sent shockwaves through the system and is having a clear impact on financial markets, both in terms of equities, but also local bonds. And remember, last week we talked about towards the end of the week, the central bank had to intervene to help support the currency. There was an emergency meeting held over the weekend as well. So watching those situations and the developments very, very closely. So for more, let's talk about exactly what went down this weekend. Bloomberg's Deputy Bureau Chief in Turkey, Daryl Liew, joins us now. Daryl, just walk us through. I sort of brushed over some of the developments over the weekend, but talk us through the significance of the arrest now. Now we know it's an arrest of the Istanbul mayor.
Istanbul Mayor Ekrem İmamoğlu was arrested Sunday, formally arrested after days in detention on corruption charges, and he's now jailed pending trial. We have seen in the past, I think there's a technical difficulty.
Okay, we will come back to Daryl. Daryl, once we've reestablished connection with you, we will pick up the conversation. But obviously, extremely important developments in Turkey over the weekend. Daryl didn't quite get to it, but of course, initially the mayor was detained. Then it was fully arrested and in jail awaiting a trial now. So those are the developments over the weekend as demonstrations continue to take place in and around Turkey, some of the key cities, but doesn't seem to be deterring President Erdogan from pursuing the line of action against the Istanbul mayor. And of course, it is having a massive impact on markets, as we spoke about with the Borsa, down 16% throughout the course of last week, and seeing major outflows through some of the most popular trades. Remember, Turkey and the Turkish carry trade was a very popular trade throughout 2025. So we'll come back to that story when we reestablish connection with Beryl. But it's not only in Turkey that we've seen major developments over the course of this weekend. Let's also talk about developments in the Middle East. Israel has killed 2 members of Hamas's de facto cabinet in the Gaza Strip. The Israeli army says Salah al-Badawil and Ismail Barhoum were hit in South Gaza by airstrikes, which resumed last week after a truce expired. Meanwhile, the military says it has responded to rocket fire from southern Lebanon by striking Hezbollah positions, including a command site and rocket launchers. Joining us now is Paul Wallace, who leads Bloomberg's MENA economy and government coverage. Paul, just talk us through what is happening in Gaza. We spoke about another front opening again, about the IDF repositioning troops back in to the Gaza Strip once more. What happened over the course of this weekend?
So, hi, Jimona. The conflict there is getting hotter and hotter, if you like, since the ceasefire broke down last week when Israel restarted airstrikes. It's moved some troops back into the Gaza Strip. It's not saying how many, and it's not yet declaring that this is the restart of a full-on ground offensive. But it certainly has. It's certainly sort of upping the scale of its ground operations day by day. It's surrounded some parts of Rafah in the south of Gaza. As you mentioned, these strikes that killed those 2 Hamas leaders, the members of the de facto cabinet in Gaza. So the airstrikes and the ground operations are getting more intense. This is Israel saying we have to do this because we need to put pressure on Hamas, and the only language essentially that Hamas understands as far as Israel is concerned is military pressure, and that Israel wants to put the pressure on them to get the hostages out. Of course, casualties and fatalities are mounting, and over the weekend the Hamas-run health ministry said that the death toll since October the 7th, 2023 in the territory has now surpassed 50,000.
50,000, yeah. And it's not just in Gaza where the situation is getting a lot worse again. Also in Lebanon, testing the fragile ceasefire, exchange of fire, the worst violation since the ceasefire took effect. What exactly has gone down in Lebanon, and what has the reaction been from authorities there?
Well, so far they're trying to sort of calm tensions there, both the Lebanese authorities and to some extent Israel. Israel does not want that front opened up again. That ceasefire in November eased a lot of stresses, economic and financial stresses on Israel. Now that the Gaza conflict has restarted, Israel doesn't want to be fighting on its northern front again. However, it is being pretty bellicose with its rhetoric and saying that it won't tolerate any fire whatsoever from southern Lebanon into northern Israel. Important also to note that Israeli assets are coming under pressure again. The shekel took quite a hit last week, and Israeli stocks fell heavily yesterday.
And Paul, just quickly as well, because we have to round up all of the developments, the Houthis also fired another ballistic missile towards Israel, intercepted, but just another example of how things are heating up.
Yes, and if you take the Houthis, Hezbollah and Hamas, those 3 fronts are very much hotting up again. They were calm until about 10 days ago, and all 3 of them are now very, very intense again.
Yep, Paul, thank you so much. Paul Wallace, who leads Bloomberg's MENA economy and government coverage. Thank you very much. Well, still ahead, Bloomberg learns that President Trump's coming tariff wave may be more targeted than previously threatened. Shuaa Capital shares their market strategy amid trade tensions next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Bloomberg's been told that President Trump's incoming wave of reciprocal tariffs may have a narrower approach than the broad-based barrage he has previously threatened. For more, let's bring in Bloomberg's John Herskovitz. John, so talk us through what we know, the latest with the tariffs. Obviously, President Trump has been talking about this day. He's called it Liberation Day over the course of the weekend. But what does it look like, the new scope of the tariffs? What do we know?
So it looks like it's going to be narrower than what was initially expected. It may exclude some nations, some blocs, nations with which the U.S. has a trade surplus and doesn't impose tariffs are going to be exempt. So this, it's maybe smaller than like broad sectoral tariffs that could have been part of it. The situation with the Trump administration is fluid, some of the sources have told Bloomberg. So when we get closer to April 2nd, we may have some better idea of what's going on. But this also invites the possibility of reciprocal tariffs. Even if some nations or blocs are excluded, there are going to be some nations that are hit, some industries that are hit, and we could see them hitting back at the U.S. And this just sparks the concern of the trade war spiraling into more uncharted territories. For the Trump administration, they see this as a way to bring billions into the U.S. Economists are doubting that perspective and see this as a way that may increase prices across the world and also hurt global growth.
Yeah, well, U.S. are calling it reciprocal tariffs, but then we need to think about the reciprocation of the reciprocal tariffs. How have nations such as China reacted?
Sure. It's China is bracing for it. China's already been hit by tariffs, and they've done their own tariffs in retaliation. And we've seen some data that's indicated that U.S. imports of things like cotton, automobiles, and some energy products has just fallen in the first 2 months of the year. Also, we see China trying to hedge its bets a little bit. Over the weekend, there were rare trade talks between China and Japan, trying to gauge their future as they're going to go forward with these tariffs. And also there's been a bit of a China shock in other parts of the world, like in Southeast Asia, where Chinese manufactured goods have come into places like Indonesia at much lower prices and really affected manufacturers there. So there's this hedging going on. China is one country that's been involved. Other countries, partners of the U.S., have sent delegations to the U.S. trying to bargain, lobby on behalf of their nations and industries.
Yeah. John, thank you so much for the overview. Bloomberg's John Herskovitz. Well, joining us now to discuss more is Shuaa Capital's Head of Asset Management, Aarthi Chandrasekaran. Good to have you with us. How much of a positive driver for markets do you think it will be if the Trump administration decides to water down the scope of these reciprocal tariffs that we were just talking about?
It would be great, actually.
Yeah.
Because we are totally in an absolute risk-off mode at the moment, right? I mean, market is finding it so hard to price in what's been thrown at it, especially the uncertainty has been tremendous. So on tariff, initially we thought that it would be very dollar positive, which has not been the case. Dollar has weakened. There have been more tariff announcements than we had expected. We have seen more of Trump administration being aggressive towards the largest trading partner. Again, that's not what we expected, Mexico and Canada. Overall, even the rollout of tariff, Johanna, it's been all over the place. It has not happened in a very orderly fashion. We thought there would be a structure. There's been absolutely no structure. Everything has been lumped up into a whole ball, pushed onto a headline. It's been a bit of a mess. So for us, I know a lot of people, a lot of clients whom we speak with, they talk about pro strategy of Trump, which is a long-term strategy. But for us, what is more important is what happens between now and the long term.
Yeah.
What happens to the market? What happens to the consumption sentiments, consumer sentiments, investor sentiments? That's going to derail the market quite a bit.
And all that is beginning to show up in the data. You mentioned one thing that I just want to draw on. You said markets have been trading with a risk-off bias, at least in the U.S. U.S. equities have been tracking negative for the year. In that environment, in a risk-off environment, you would expect the dollar to perform well because of a risk-off bid to the USD. That hasn't happened this year. S&P is down 4%. The dollar is also down 4%. What do you point that down to?
I mean, that is definitely decorrelated a lot, right? I mean, we have seen a lot of correlation between bond and equities. We have seen the recorrelation, but not with the dollar, because a lot of people, a lot of consensus, and us as well, we said the tariff would be very positive for the dollar because inflation would be higher and all of that. Yes, the inflation is likely to be higher, but you have a huge amount of growth scare. So the long-term bond yields, if you look at it, is pricing in a growth scare, which was not the case before.
Why do you think the Fed are not more worried than, last week the Fed chair sounded pretty even-keeled when giving signals about the future direction of interest rate policy?
It's very difficult doing what Fed has to do, right? I mean, because you have an inflation expectation which is de-anchored, you have a slower growth, you have a slower job creation. It's not, they're just actually walking a very tight rope out there. It's very difficult for them. I mean, initially we were expecting 2 rate cuts, but just going back into what Fed did and what Fed said last week, it looks like they might be preparing the market for an insurance cut in May. You may never know.
I just wonder, central banks, specifically the Fed, if they're in this stagflation environment where you get an inflation shock, but then you also get an economy which looks like it's beginning to downward spiral, to which one of those aspects are they going to be more reactive? To the inflation side of the mandate or to the unemployment side of the mandate?
It depends on the intensity, magnitude, and order, and that's how I would quantify it. It depends on what comes first. If I still think that Fed has a room to cut in May because the next 2 PCE prints might not have any of these tariff lumps up, right? So the April number and the March number would still be like about 2.5. They have increased the PCE expectation from 2.5 to 2.7 target. So Fed has that leeway to cut in May. They might not have that. They can't sneak a cut probably later part of the year, because you will start seeing the tariff getting piled on to the inflation numbers and the CPI numbers later part of the year as well. So which is why I think they have a chance, room for themselves to cut in May, maybe not in the second half of the year.
What about global markets outperformance? One of the themes last week was you started to see a bit of a sputtering out with the China tech trade. Similar theme for European equities. They actually underperformed U.S. equities last week. Are we getting to the end of global markets outperformance versus U.S.?
Actually, we have reduced the positions in U.S., overweight position in U.S., and we are getting more into Europe and China. But again, Europe is, I mean, the big question for us, and we are debating still, is it a trade or is it actually a substantial investment, a long-term investment thing for Europe? Because that's not something which is very clear. Yes, I love the fiscal spending. That's going to have a multiplier effect on the GDP. But GDP composition is not about fiscal spending. It's about investment. It's about consumption. It's about imports. It's about exports. Your tariff and trade policies will have an impact on Europe's other part of the GDP, and that might not be good for the market or good for the GDP itself. So for us, and on Europe, are they actually changing the page on the regulatory side? We don't know yet. Can they be as competitive as U.S. in the like the way U.S. has been in the last 2 to 3 decades? We don't know that, right? So for us, Europe is more a tactical position. We are tactically positive on Europe, but it might not be a long-term strategy to be in Europe. So we'll obviously take profits as and when we think.
Well, nice preview. I have the very fortunate opportunity to sit down with Mario Draghi later this week. So those are some of the questions that I'm going to be putting to him about the short-term driver versus long-term competitiveness. Aarthi, always a pleasure to have you on the show. Thank you so much. Aarthi Chandrasekaran, Shuaa Capital's head of asset management. Thank you. Well, still ahead on Horizons Middle East and Africa, Sudan's army says it's recaptured the presidential palace in Khartoum from a rebel paramilitary group. The details coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, back to our top story. Turkey has formally arrested Istanbul's mayor, Ekrem İmamoğlu, on corruption charges. The move to jail could prevent President Erdogan's main political rival from running against him in the next elections. For more, let's go back to Bloomberg's Deputy Bureau Chief in Turkey, Beryl Akman. Beryl, good to have you back with us. So just talk us through the significance of this arrest and what the political ramifications could be for Turkey.
Absolutely. So Istanbul Mayor Ekrem İmamoğlu is perhaps the most powerful and popular politician in the country next to President Erdogan. And on Sunday, he was put behind bars on allegations of corruption, which he denies and says are politically motivated and are led by the government and President Erdogan to have him barred from the next elections that are slated currently for 2028. The main opposition party, though, yesterday still went ahead with a primary and officially nominated İmamoğlu as its presidential candidate. İmamoğlu's currently future is quite uncertain. The legal cases can take up to years in Turkey. And on top of that, just ahead of his police custody last week, his university diploma was revoked on alleged irregularities, and a university degree is mandatory in Turkey to run for the high office. So for the opposition and for the opposition supporters, this is a blow to democracy and a step up in Erdogan's escalation on silencing dissent and any crackdown. And that's why it's seen as very significant, though we have seen opponents of the president or the government in the past being jailed or face a slew of investigations and court cases. This is the first time that a very powerful politician has been jailed.
Yeah. And Daryl, there's been a knock-on effect to markets. We were just talking about it being the worst week for the Borsa Istanbul equities since the GFC. You have local bond yields up more than 40 basis points. What are we expecting to happen with markets this week, and what steps has the central bank taken to help reduce some of the alarm amongst the investment community?
Yes, after last week's sell-off, we've seen the Turkish Central Bank and other regulators and policymakers step in to make sure that another step similar to what we have seen is avoided. The central bank yesterday held an emergency meeting with lenders, which is what we reported yesterday and was confirmed later by the Banks Association. And preventative measures against any future market volatility was discussed, according to a statement published by the Banks Association. We're seeing that the central bank wants to ensure markets and suit investors that it'll do anything to protect the currency. We're also seeing moves by other regulators to bolster stocks and ensure that the sell-off of last week doesn't repeat as of today. I think investor concern has been eased a bit after last week, but the underlying concern because of the political moves continue. And so far, based on what the monetary policy makers are saying, is that they'll do anything to make sure that the currency is defended and inflationary risks are mitigated.
Daryl, good to have you on the show. Daryl Akman, Bloomberg's Turkey Deputy Bureau Chief. And coming up, the UAE pledges $1.4 trillion U.S. investment following a meeting between the kingdom's national security advisor and Trump. Details next. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Formal arrest. Turkey jails Istanbul's mayor on corruption charges in a move which could prevent President Erdogan's main political rival from running in the next elections. Lethal strikes. Israel kills 2 members of Hamas's de facto cabinet in airstrikes on the Gaza Strip as tensions ratchet up in southern Lebanon, testing the fragile ceasefire. And tighter focus. President Trump prepares to announce his wave of April the 2nd tariffs, targeting countries which have barriers on U.S. goods, but excluding some nations and blocs. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Happy Monday morning to you all. Yet another big week of data, of geopolitical developments to get through this week. But as ever, taking a look at markets and how they're trading, a bit of a green on the screen when it comes to U.S. futures this morning. S&P futures up 0.6% after a better end of the week last week. Both Wall Street indices, the S&P and the Nasdaq, ending up in the green, also tracking positive for the week as well. But the latest developments vis-a-vis President Trump potentially watering down those reciprocal tariffs on April the 2nd are being met well by investors, hence some of the positivity in markets today. European futures also seen opening up in positive territory. 10-year yields sliding a little bit upwards, so we're selling off up 2.7 basis points, getting closer to 4.3%. So I spoke about this earlier, but 4.2% was a good point of support for 10-year U.S. Treasury yields, and we've been drifting a little higher since then. And then Brent back below 72 $82 a barrel, down 0.4%. And they're keeping an eye on a couple of factors, of course, geopolitics, but then also the fundamentals, the demand signals coming through from the world, and that all-important April the 2nd tariffs date, what that could mean for the global economy. And switching over, Asian markets, April is off today, so I'm going to do my best impression, but the handover is mostly red, actually, so bucking the trend that we're seeing in U.S. futures. Chinese equities leaning towards the green, up 0.2%. Hang Seng slipping a little bit, and as Ava was highlighting towards the end of last week, we are seeing a bit of the China tech trade running its course. Towards the end of last week, we saw a bit of a breather for some of those key tech stocks. We've got the likes of BYD and Tencent to watch out for later today. Nikkei trading flat. We had some disappointing PMI numbers come through this morning. And then Indonesia continues to come under selling pressure, down yet another 3% this week after quite a big underperformance last week on back of the political developments there that are also spilling into financial markets, similar to what's been happening in Turkey. As for the terminal chart, well, it sort of ties into what I was just saying about Asian markets and the fact that for most of this year, and you can see last week where you saw that little move downwards, but China's Tech 8 have been massively outperforming the Magnificent 7 in the U.S. So this chart just shows that to you, and you can see that since the beginning of the year, the white line, which is China, has massively outperformed the blue line, which is U.S. Magnificent 7 stocks. Now, speaking of tech, the UAE will invest $1.4 trillion in the United States over 10 years, following a meeting between President Trump and the UAE's National Security Advisor, Sheikh Tahnoon bin Zayed Al Nahyan. The White House says the investment will focus on AI infrastructure, semiconductors, energy, and American manufacturing. Joining us now is Deloitte's Director and Lead of AI and Data in the Middle East, Sara Martins Gomes. Great to have you with us. So the big announcement of the weekend, of course, was this massive sum that the UAE are looking to invest $1.4 trillion into the U.S., a lot of it going into AI and infrastructure around AI. And the UAE have been going really big into AI investments over the last few years. How transformative do you think artificial intelligence will be for the UAE economy in coming years?
So I think first we need to understand the context of UAE and all these investments. So what we are seeing is a major pressure, external pressure for the organizations and government to implement AI at scale. The second thing is we have this investment. We have the pressure, but we have also the organizations planning to invest in creating those foundational capabilities. And why? Because even with this vision, there is at the core of the strategic vision and the transformation of the economic vision for UAE is AI. So we see the pressure, we see the investment, but a lack of capabilities. And this lack of capabilities mainly in the talent and infrastructure.
Okay.
So we see infrastructure as core investment for UAE to be able to transform the economy.
So as it stands right now, how does the UAE compare in terms of AI developments and capabilities versus other countries around the world, just in terms of the actual implementation of these AI technologies?
So we see bold visions here. We see a huge investment, and we see that UAE is creating the capabilities for the future. We don't see yet the implementation at scale, but we see that UAE is preparing by these investments, by making AI at the core and making it so explicit. So we understand that in the future we are being prepared to scale.
Yeah. And how important is the investment in data centers when it comes to that overall vision? You mentioned the appetite to invest more in infrastructure. Is data centers namely where it's at?
Is data centers, is GPUs, is creating the supercomputers, so this AI infrastructure. And the important thing is that UAE is not seeing this just as an ability for UAE to be the leader in tech. So UAE is seeing AI infrastructure as an investment also to capitalize and to develop the economy. So to provide the capacity for example, companies that doesn't have this ability to invest, so to provide the capability for them to develop the overall region.
Yeah. One thing about data centers is they need data. Apart from the energy consumption, they actually need data. And the UAE is still a small economy. I just wonder whether the absence of data and scale could be a roadblock to the build-out of some of these AI ambitions?
The short answer is yes, but what we are seeing is, again, global partnerships to try to avoid the scarcity of data. But if it is, let's say, a challenge for UAE the size, we have also the other side. There is once here in the UAE, everything is much more centralized compared, for example, with Europe. We see this as actually a way to maximize the power of data, because it's easier to make sure that the data will be managed, will be well governed. So we have the two sides of the same coin.
What about the talent shortage that you mentioned? What's the remedy there, and what can be done to upskill or even bring in talent that is commensurate with what's required?
So what we see now is that UAE is a little bit stuck with external profiles.
Yeah.
So in terms of the skill set that we have. But we see also a huge investment in creating the talent part. We see, for example, MBZ UAI, so it is the first university in the world focused just on AI, and we have established here in Abu Dhabi. So we also see national major programs, for example, the 1 billion Arab coders, to make sure that we will upskill people. There are national, so Emirati people, to understand. So here in the region, we are trying to cover and to fill the gap.
Yeah, okay. So final question. Saudi Arabia also have big plans as well. How do Saudi Arabia's plans differ from what the UAE are trying to achieve, if at all?
We see, the challenges are the same. In terms of the bold visions, they are more or less the same. What we see in terms of differences is, here in UAE, the approach is much more agile. In KSA, we see huge investments in major programs, large-scale innovation. So let's say, the size and the speed that we are inputting in the transformation.
Yeah, interesting. A fascinating discussion. I'm sure it's something that we're going to be talking about a lot on the show. Deloitte Director and Lead of AI and Data for TMT Industry for the Middle East, Sara Martins Gomes. Thank you. And don't forget our Mideast Money newsletter. It's out every Monday. For more of these stories on the intersection of money and power in the region, you can subscribe at bloomberg.com/newsletters. Now, Sudan's army has recaptured the presidential palace in Khartoum from the rebel Rapid Support Forces paramilitary group. Despite soldiers celebrating the symbolic victory, fighting has continued, with the drone firing a missile at the palace, killing soldiers, journalists, and civilians. For more, Bloomberg's Ondiro Ganga joins us now. So, Ondiro, talk to us about the significance of the recapturing of this presidential palace. Why was it a big moment, and what is it likely to do to the infighting that's taking place?
Hi, Jumana. So it's a big moment on two fronts. One, on the symbolism part, it's just good for optics. It shows the public that the army is making good progress and is trying to recapture some of the positions that were previously held by RSF. And also it's good for motivating their fighters that have been waging this battle for nearly 2 years. On the strategic point of view, it's going to serve as a nexus point for some of the military troops to gather and try and move south to push out RSF from the positions that it's holding in the southern part of the country. And this is as a result of the encirclement of Khartoum. We've been seeing counterattacks by the military since September of 2024. On the other hand, the RSF might try to downplay this, but they will be counting their losses. They released a statement saying that they are fighting really bravely and they're determined to liberate all the occupied positions. And their leader has previously come out and just encouraged the fighters not to give up and not to also give up the Battle of Khartoum. They still control some parts of the city, including the airport, and so they're not going to let go of their tough lying law. And citizens are reporting that bombardment has increased, and this is going to add to the fatalities. You mentioned casualties in your intro. So far, in counting, tens of thousands have lost their lives. 12 million have been displaced. 48 million are in risk of hunger and in dire need of help and food supplies.
Yeah, I was reading deaths of more than 150,000 people since the Sudan civil war started 2 years ago on zero. So these are huge numbers. Could this actually mark a turning point for the civil war in Sudan? Do we have a read on what could happen next?
Jumana, we don't. Actually, we don't, because the country at this point is split almost into two directions. You have the army that controls the east and the north, and the RSF that controls almost all of the west and also part of the south. Will this fighting stop anytime soon? No, because at the beginning of the fighting, they were just depending on themselves and their resources, but we have seen international support come in. You have the RSF that is now being supported by the UAE with arms and also money, and the army is supported by Iran. They've been given combat drones, and this just means that the fighting is going to intensify. Is there a likelihood of a clean split like what we're seeing in Libya? Less likely, because none of the two sides has made it publicly clear that they intend to just maintain that tough. Both these sides have ambitions to expand their territory and have control of the whole country. And this just speaks to some of the challenges that we've been seeing in the region, military coups characterized by discontentment in the public and the army overstepping its boundaries.
Yeah. Bloomberg, Sanjira Ganga in Kigali, Rwanda, thank you so much for bringing us the reporting on the latest in Sudan. Now, a gas pipeline has caught fire in Nigeria's Rivers State, the third incident in a week at facilities in an oil-rich region that's under emergency rule. It is the latest in a series of fires that threaten to disrupt operations in Africa's largest oil-producing country. Nigerian President Bola Tinubu imposed a state of emergency in the area following attacks on oil pipelines that briefly halted operations on a critical line. Ethiopia has reached a deal with its creditors to restructure $8.4 billion worth of international debt. The agreement under the G20 Common Framework, backed by an IMF program, will slash debt service by $2.5 billion through 2028. Ethiopia's finance ministry says the move will also allow the country to spend more on critical public investments. The South African ambassador expelled from the U.S. has returned home, saying he has no regrets. Ibrahim Rasool was welcomed back by supporters at Cape Town Airport, saying he will wear the badge of persona non grata with dignity. Earlier this month, U.S. Secretary of State Marco Rubio said Rasool was no longer welcome after comments he made about President Trump, escalating a running feud between Washington and Pretoria. And coming up, breakthrough in Chinese AI. Jack Ma-backed Ant Group says their techniques could cut costs for training AI models. Details up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Bloomberg has learned that Jack Ma-backed Ant Group has used Chinese-made semiconductors to develop techniques for training AI models that would cut costs by 20%. Meanwhile, Tencent has joined China's crowded AI field by unveiling its upgraded reasoning model, Hunyuan T1. So joining us now from Hong Kong is China correspondent Min Lo to tell us all about these developments. Maybe let's just start with this Ant breakthrough. Feels like it actually could be quite a major development, using Chinese semiconductors to bring down the costs of these large language models. What do we know?
Yes, Jumana. So Ant is saying that it can use Chinese chips provided by companies like Alibaba and Huawei to train AI models at 20% less cost. It's training these AI models using this particular approach, the MOE learning approach. But basically, this model usually would require these high bandwidth memory chips that are, number one, very expensive to acquire, and number two, the most advanced of these chips are under export control. But Ant is saying it can train the model using Chinese chips and achieve the same results as if you were to use the H800 chips from NVIDIA. And those are the scaled-back version of NVIDIA chips that are tailor-made for China in order to meet export control requirements, and also saying that their model is able to beat Meta on some benchmarks, including its understanding of English language. But there are still some teething problem with parts of the training process. For example, when it comes to stability, if you just change the AI model structure or the hardware by just a little bit, it could make the error rate jump by a lot. But still, it's an important milestone that could potentially slash the development costs for smaller firms who want to enter the AI race, and could put China on track to achieve its self-sufficiency goal.
Yeah, just another example of the competition that's coming through from China on AI and the support of these models. But tell us also, within the same vein, about Tencent's latest model. How does that model differentiate itself from some of the other ones that are in the market already?
Yes, it's a very tight race, and Tencent just unveiled the latest iteration of its Hunyuan T1 model, which Tencent says is able to decode at twice the speed of other models with similar parameters. It's supposed to be on par with the likes of ChatGPT's O1 model and DeepSeek's R1 model, and a team of Tencent engineers had demonstrated this at a live-streamed video call where they tested a complex math problem on their T1 model and the R1 model and showed the T1 model returning the results quicker. And so this has potential, again, speeding up the speed of that development is really accelerating in China this year. And our in-house analyst, Robert Lee, however, is saying that Tencent's latest model doesn't do enough to differentiate from other players, given there are literally hundreds of these large language models in China. Of course, the most prominent ones are the ones by the big tech companies, but investors are really most concerned about which of these companies can monetize their AI offerings, and Tencent is taking a two-pronged approach there because they're investing in their own proprietary AI model, but they're also using these third-party open source models like DeepSeek, and they have gone the furthest in incorporating DeepSeek in their suite of products, including their short video, their app, WeChat app, and their chatbot so far. Bloomberg's China correspondent Min Min Lo, thank you so much for the reporting. Well, coming up, the Dubai Financial Services Authority is weighing changes to further establish the city as a hub for hedge funds. We get the details on what that includes next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Dubai is considering significant changes to its rules governing money managers in a bid to lure hedge funds. The Dubai Financial Services Authority is undergoing a sweeping review of its slate of regulations to reduce unnecessary burdens and lower barriers to entry. For more, our hedge funds reporter Hema Parmar joins us right now. Hema, first of all, just highlight for us the context of these moves and how big of a change we're looking at from the DFSA.
Yeah, so this could be the most significant changes we've seen in regulations in over nearly 2 decades. This is a sweeping review the DFSA is doing of their whole fund regime to really look at what's working and what's not working, what proposed changes they may want to make. And we've already seen some, and there very well may be more changes to come.
Okay, so ostensibly what they're trying to do here is to sort of promote DIFC as a global center for hedge funds.
Yes.
What ultimately is the intention, do you think?
So the goal here is to make it easier for funds to move here, less burdensome, to reduce unnecessary regulatory rules that are out there, to lower the barriers of entry, to more closely align with EU and UK regulatory standards. And so all of these things really go with what we've been seeing over the past several years, which is to make the DIFC more of a hub for hedge funds and to consult with them to see what things might be helpful.
What are some of the proposed regulatory changes that are being put forward then?
Right. So one is looking at the amount of capital that funds need to keep aside, cash on hand. So for a larger fund, a larger firm, that might be reduced from $230,000 to $140,000. Another proposal is for funds that are smaller, more emerging startup funds. That minimum might fall from $70,000 to $40,000 for locally domiciled smaller managers.
And we've already seen a huge influx of funds into this part of the world. Is this targeting a different type of fund, or perhaps different in nature, different jurisdiction? Who are they appealing to ultimately?
So in part, it is the big funds, but also, you know, the regulation about potentially bringing down the minimum cash on hand for smaller emerging funds. That's really reflecting what we're seeing with the DIFC and them starting up a whole building, retrofitting it to make space like a WeWork for emerging fund managers. Really, you know, around this expectation that you might see more newbie startup funds coming to the region, and so one more effort into seeing what might be helpful to encourage more of those emerging fund managers.
Yeah, great story. Hema, thank you so much for bringing it to us. That was Hema Parmer, our hedge funds reporter. Well, let's take stock of how equity futures are trading as we inch closer and closer to that all-important April 2nd reciprocal tariffs day. And today you can see all of these equity futures are leaning towards the greens, so some positivity is in the air, possibly in the story that the Trump administration is thinking of dialing down or watering down the scope of those tariffs to be applied on April the 2nd, both in terms of sectors, but also in terms of countries as well. It looks like there will be quite a few countries exempted from that ultimate list. So keep an eye on how things develop between now and then. But clearly, equity markets are reacting quite positively to that news. European futures also up 0.2% as well. And in terms of data, you want to watch out for manufacturing data coming up today in the U.S. PMI manufacturing numbers, also the European PMI numbers. Keep an eye out for that as we talk about the potential impact that these tariffs could have, not just on inflation and inflationary dynamics, but also on global growth dynamics as well, because that is really setting the tone for a global investor sentiment, as we've been talking about. All right, coming up in the next hour, Daryl Liew from SingAlliance joins the show with his market outlook. We'll talk about the latest developments with tariffs. I'm Johanna Bersace in Dubai. Our second hour of Horizons is coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Formal arrest. Turkey jails Istanbul's mayor on corruption charges, and a move which could prevent President Erdogan's main political rival from running in the next elections. Lethal strikes. Israel kills 2 members of Hamas's de facto cabinet in airstrikes on the Gaza Strip as tensions ratchet up in southern Lebanon, testing the fragile ceasefire. And tighter focus. President Trump prepares to announce his wave of April 2nd tariffs, targeting countries which have barriers on U.S. goods, but excluding some nations and blocs. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Johanna Bersace in Dubai. Welcome to the second hour of Horizons Middle East and Africa. Quite a lot of green on the board behind me. The handover from Asia, not so pretty. I'll get there in the moment. But futures leaning towards positive. S&P futures up around 0.2%. This on reports over the weekend that President Trump is thinking of dialing down the scope of the tariffs introduced on that April 2nd reciprocal tariffs day, or what Trump is calling Liberation Day, but ultimately potentially a positive catalyst for markets because it may actually include some country exemptions and even some sector exemptions as well. So positive start for Wall Street indices. Euro stocks futures also positive, but marginally less, so up 0.2%. 10-year yields you can see slipping a little bit higher this morning, up 3 basis points, so inching back closer to 4.3%. Keep a close eye on PMI manufacturing numbers coming out later today. And then Brent trading just below $72 a barrel, down 0.4%. Again, that market keeping a close eye on geopolitical developments, in addition to that April 2nd tariff day, the impact that that could have on global growth. And don't forget that we're getting closer to the restart of OPEC Plus production, putting back extra barrels to the market versus where they were over the last couple of years. So keep an eye out on the potential supply impact that that could have on the market as well. Flipping over, though, Asian markets, I did hint that the handover hasn't been so pretty. We've talked through some of the developments in AI and Ant and the development that they have come through on their own models using some of those Chinese chips. So perhaps a bit of a breakthrough there. You're seeing the CSI turn negative now, positive now, up 0.4%. Hang Seng trading flat. Similar theme for the Nikkei. We had some weak data come through from Japan on the PMI front. And then Indonesia continues to underperform. The index today down 2.3% after dropping substantially throughout the course of last week. On Friday alone, it was down around 5%. There, similar to what's been happening with Turkey, we are seeing political developments impact financial markets. So speaking of Turkey, let me just draw your attention to what has been happening with some of these key financial indicators there. And this specifically is the Istanbul bourse. And you can see last week, it dropped 16.6%. That is the worst week for the Turkish index since the GFC. So it's been many, many years since you've seen a decline of this magnitude. And of course, not just Turkish stocks. We saw yields as well, local bond yields sell off about 40 basis points. At one point, the Turkish lira was around 7% weaker, but our reporting suggested that the central bank did come in to help support that market and buy some of the local currencies. So there have been a lot of developments, both economically and politically. But let's turn right now to the developments over the weekend, because Turkey has formally now arrested the Istanbul mayor, Ekrem İmamoğlu, on corruption charges. The move to jail him could prevent President Erdogan's main political rival from running against him in the next elections. The arrest has already triggered mass protests in several cities. So for more, Bloomberg's deputy bureau chief in Turkey, Daryl Liew, joins us now. Daryl, talk us through what happened this weekend and the significance of the arrest.
Istanbul Mayor Ekrem İmamoğlu, after days in detention, was formally arrested and jailed on Sunday on corruption charges. Him and his main opposition party see the move as politically motivated and a way for President Erdogan to bar İmamoğlu from competing in the next elections. His party actually held a primary on Sunday and nominated İmamoğlu as the only presidential candidate. But what makes this move so significant is that İmamoğlu is perhaps the most powerful and popular politician next to President Erdogan that we have seen in the last 2 decades. And while we have seen opponents of President Erdogan or critics and dissidents get jailed or face court cases in the past, the main opposition party had been largely untouched. So this move is really an escalation and seen by Erdogan's critics as a massive blow to democracy and the rule of law in the country. And like you mentioned a little bit, it has also rattled investors, both domestic investors and foreign investors last week, and we've seen major slumps in both the Turkish lira and stocks.
Yeah. How are the developments of the weekend likely to affect investor sentiment as we start out another trading week?
I think the expectation this week is that we won't see as much volatility as we did last week, and the risk has now been priced. And we have seen monetary policy makers step in to defend the lira. They have taken a number of measures last week to ensure that financial conditions stay tight enough through liquidity measures. We have also reported yesterday that the central bank held an emergency meeting with bank executives yesterday to discuss any potential moves and any potential developments in markets this week, and to ensure that commercial banks and policymakers are on the same page. I think there's still an underlying concern from investors that the heightened political tensions will linger in the short run, and that can absolutely affect market sentiment. But we're seeing really economy officials step in to soothe any concern. But trading in Turkey is only starting, and we'll see future moves in the next few hours.
Yeah, and as we spoke about, I have been speaking about the last couple of days, one of the most popular EM trades last year was buying front-end yields in Turkey for that carry trade. So there's probably still quite a lot of positioning there. Daryl, thank you so much for bringing us the latest. Daryl Liew, Bloomberg's Turkey Deputy Bureau Chief. Now, Israel's cabinet has taken the first step towards dismissing the Attorney General in the latest attempt to reduce judicial oversight over the government's actions. Moves to fire the nation's top security and legal officials, including Shin Bet chief Ronen Bar, sparked nationwide demonstrations over the weekend. So let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Israeli internal politics, domestic politics, once again in focus. Last week we were talking about the developments with Shin Bet and the dismissal of the intelligence security chief there. Now the Netanyahu government has set their eyes on the Attorney General. What's the latest?
Indeed, this was hardly a surprise. This lady was a holdover from the previous, more centrist government, and the current government, more right-leaning, leaning toward more religious Jewish parties, members had long complained about her interference, they said, her placing legal obstacles before various various policy moves. It was really just a matter of time, and now it would appear that the Prime Minister, Netanyahu, is confident enough with the course of the Gaza war that's far from over to begin implementing her ouster. As far as critics of the Prime Minister are concerned, this is yet another attempt by the government to remove a guardrail for the healthy democratic functions of a government that would lack potentially guardrails otherwise. So the closer we get to the final ouster, this isn't finalized yet, we'll probably see more protests. The question is whether protesters' opponents can mount the sort of public disruption that might make the government change course. They haven't managed so far. But what has happened now is effectively, after a year and a half of war in Gaza, this move by the government, following on the move last week to fire the head of the Shin Bet security service, has returned to the public discourse in Israel the question of judicial oversight, of balance between branches of government, and that has now eclipsed the question, or threatens to eclipse the question, of how to conduct the still ongoing Gaza war.
And of course, the international community is still very much focused on the Gaza war, the state of the ceasefire, renewed offensive in the Gaza Strip. There's been the worst exchange of fire in Lebanon since that ceasefire came into effect. What is the status of all of these ceasefires, Dan? Are they going to hold? And I mean, in the case of Gaza, we spoke about it last week, it actually is effectively no longer standing.
Well, all the regional ceasefires basically stem from the ceasefire in Gaza. That ceasefire expired on March 2nd. It was only a matter of time before fighting resumed, and it did resume 6 days ago with a surprise series of Israeli airstrikes that have now been built upon with limited ground movements by Israeli troops and tanks in the Gaza Strip. There appears to be some unraveling elsewhere. There are daily launches of Houthi missiles at Israel, so far with no damage within Israel, but some disruption in terms of sirens in major population centers like Tel Aviv and Jerusalem. There has been friction along the Lebanon border, though that ceasefire appears to be keeping intact. What's happening in Gaza is the Israelis appear to be focusing, among other things, on the civilian government of Hamas. Keep in mind that Israel's objective is to destroy Hamas completely and to prevent it using a ceasefire or a lull in fighting to rebuild its capabilities. So yesterday, 2 members of the Hamas Politburo in Gaza killed in Israeli airstrikes, bringing to 11 the number out of 20 total members of that forum who've been killed, effectively halving the civilian Hamas administration of the Gaza Strip during this war. It would appear as the Israelis have a very specific focus, and they're trying to apply tactics in this resumption of the offensive that weren't applied earlier.
Yeah. Bloomberg's Dan Williams in Jerusalem. Thank you so much for the latest. Now, still ahead, hear why SingAlliance says it currently has a preference for European and Japanese equities over U.S. stocks. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. U.S. stock index futures climbed in early Asia trading on signs the next round of President Donald Trump's trade tariffs could be more measured than had previously been suggested. Joining us is Daryl Liew, Head of Portfolio Management at SingAlliance. Good morning to you, Daryl. How important or relevant is it for markets that this April 2nd date is approaching and President Trump is thinking of watering down the imposition of some tariffs, at least on some countries and specific sectors?
Well, I think basically this has been quite a huge overhang on markets, right? The key thing that markets don't like is uncertainty, and that's been a key driver of all the market volatility we've seen over the last couple of weeks or even months. So the fact that he's come out to say, that he might take a more measured, calibrated approach depending on perhaps what other countries are willing to agree to provide the US could be a sign of maybe more certainty moving forward after the 2nd April deadline.
Yeah, and yet we've seen a lot of those so-called U.S. exceptionalism trades sell off and not perform over the last month or so. Do you think that theme has run its course now, that we're not going to see a resurgence of the U.S. exceptionalism idea for the rest of this year?
Yeah, that's the biggest issue that we're seeing in the marketplace today, because if you look at how investment strategy has been run over the last decade or so, it's always been on the theme of US exceptionalism, right? That essentially you just buy the S&P 500, you buy the key US stocks, and you basically will be making money. And if the US market does sell off, then you just buy the dips. That really hasn't been seemed to be the case in recent months. And I think the issue that we see there is that, you know, if you look at the semiconductor industry, for example, led by NVIDIA, their earnings numbers are actually looking pretty decent. And if you look at the guidance for this year and into next year, the order book is still pretty strong. But despite these numbers and guidance, the stock is really struggling to break out of its recent trend line. So, you know, because of that, I think, you know, we've seen a rotation of funds, perhaps out from the US into other international markets. And I think that's going to be an overhang for the US market, at least in the near term. Yeah.
It's interesting you mentioned NVIDIA specifically. Earlier on, we were talking about a chart that shows the divergence between the Magnificent Seven fortunes versus the top tech 8 companies, the 8 top tech companies in China. And I wonder to what extent the underperformance of US stocks can be put down to all of the competition that's arising from some of these Chinese companies that earlier on we were talking about, and financial, and the fact that they've started relying on more Chinese manufactured chips to produce their models. How much of a threat does that constitute to US's AI dominance?
Yeah, I think to answer your question, I mean, don't think anybody really has the answer to that question at this point in time. But I think what we've seen in terms of the flow of funds is the fact that the Chinese tech sector has enjoyed a bit of a revaluation, right, over the last couple of months after DeepSeek, for example, came out with its model. And I think even despite the rally in the likes of Alibaba and the other Chinese tech names, the Chinese tech sector still trades at probably half of that on a FY26 earnings compared to the US tech giants. So I think that there could be further room to run, at least on the Chinese tech sector. You still see on a week-to-week basis more Chinese companies come out with further announcements in terms of how they're harnessing AI to develop and how their R&D is starting to pay off. Take BYD, for example, who has talked about the new charging network. You know, so I think the sentiment towards China has shifted to a certain extent. How much more can this rally run? I think it really depends on, for example, what we talked about on 2nd of April, whether there's going to be additional tariffs put on China. That could cause a bit of a blow to the Chinese rally. So there are a lot of different moving parts. So it's hard to make a call at this stage.
Yeah. Do you think China has the fiscal ammunition to do what it takes to counter the potential U.S. tariffs that are about to be applied? I mean, they've already been imposed, but we know that more are coming down the track. Do China have the ammunition to counter it?
Well, I think they still can stimulate the economy further. I think the key indicator to that extent was how the Chinese government now appears to be working with the private sector. Take the meeting in February, for example, between President Xi and all the leaders of the private enterprises, primarily the tech companies. It's a sign of a shifting sentiment, right? That the Chinese government is no longer looking to crack down on private enterprise, but looking to work together with the private enterprise to kind of turn around the Chinese economy. I think there's recognition there that a lot needs to be done. And I think in recent weeks and months, we've started to see a seemingly turn around in different sectors that has been struggling. And also we've heard about the measures that they're trying to roll out to kind of boost domestic consumption as well. So I think that they do have ammunition, and I think key to that will be depending on, you know, obviously what the US decides to slap on China and how China responds.
Yeah. Daryl, thank you so much for joining our show today. Daryl Liew, Head of Portfolio Management at SingAlliance. Thank you very much. And coming up, talks between U.S. and Ukrainian officials have continued in Riyadh over the weekend as President Trump pushed for a ceasefire. We'll have the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Officials from the U.S. and Ukraine have called their talks in Riyadh as productive and focused as they push to end Russia's 3-year invasion. U.S. and Russian delegates are expected to hold separate talks today. Joining us now is Tony Halpin, who leads Bloomberg's Russia economy and government coverage. So the talks are continuing in Saudi Arabia. What may come out of these talks this time around?
Yes, this is part 2 of talks that began yesterday with the Ukrainians. Today it's the Americans and the Russians. The Americans are hoping eventually to get an agreement to extend the existing ceasefire covering energy infrastructure to include the Black Sea, covering shipping there. And that's their main objective for this, as well as to thrash out some of the details of how things like monitoring will take place on the energy infrastructure, for example, and what happens if it's breached.
Yeah, I mean, you say that the goal is to move towards a more comprehensive ceasefire away from just the energy infrastructure. But yet, we know, and this is what President Zelensky said yesterday, there have continued to be attacks on civilian infrastructure in Ukraine over the weekend. So it doesn't put us any closer to a full ceasefire, does it?
Yes, that's right. I mean, both presidents agreed to an energy infrastructure ceasefire, and Russia has interpreted this very strictly as targeting energy plants and electricity infrastructure, but it has continued, as the Ukrainian president noted, to bombard Ukrainian cities, and that's going to clearly be an issue going forward as the US tries to achieve a more comprehensive ceasefire.
Yeah. Do we have any signals that Russia is willing to make any concessions on these talks?
No, currently that's one of the interesting aspects of these talks, that the US in particular has been pressuring Ukraine on various aspects of the war and to try and push it to a position where it will make concessions. It's demanded very little from Russia, and Russia has offered practically nothing.
Yeah, what are the types of concessions do you think the U.S. should be demanding out of Russia then? It should be proactive as opposed to waiting to Russia to put something on the table.
We do have to remember that Russia started this war, and the efforts of the United States now to end this war could be shortcut very quickly if Russia simply withdrew its forces back to the international line. Clearly, Vladimir Putin's not going to do that. So any compromise deal that the US thrashes out is going to involve some loss of Ukrainian territory. Now, there's a big question whether that rewards aggression.
What about Europe's place in all of this? Over the weekend, Steve Witkoff, the Middle East envoy, but of course he's been actively involved in discussions. He sat down with Tucker Carlson, where he sort of dismissed the idea of the coalition of the willing as something that was a mere pipe dream for the Europeans.
Yes,
what do you make of those comments vis-a-vis what Europe are trying to do to shore up Ukraine's defences?
He was very dismissive of that, and particularly of the UK's Prime Minister Keir Starmer's ideas. Essentially, I think the US doesn't have much expectation that Europe will be able to put some kind of force on the ground that would tip the balance in this war. And so it's very much taking the view that Russia has always taken, in fact, that this is a matter for discussion between the US and Russia, and that the two of them will thrash out some agreement that will be presented to the Ukrainians and to Europeans to accept and sign up to.
Yeah. Okay. Well, we'll see whether Europe can continue to be sidelined. Tony Halpin, thanks so much, leading Bloomberg's Russia economy and government coverage. Thank you. Well, South Korea's Constitutional Court has dismissed the impeachment case against Prime Minister Han Duck-soo. Han was accused of aiding and abetting President Yoon Suk-yeol's abortive declaration of martial law. The decision marks the first time the court has ruled on a case related to Yoon's decree, which plunged South Korea into its worst constitutional crisis in recent history. Canadian Prime Minister Mark Carney has called an election for April 28th after requesting the dissolution of Parliament. Polls indicate the race will be a close contest between Carney's Liberal Party and the Conservatives, led by Pierre Poilievre. Both parties have promised tax cuts and are making the case for who would be better at negotiating with President Trump over tariffs. And speaking of, we are approaching that April 2nd deadline, the reciprocal tariffs day, but some news stories of the weekend indicating that there may be a watering down of some of these reciprocal tariffs on certain countries and sectors. On the back of that, all of these markets are trading up in the green, as you can see. Now, coming up, Sudan's army says it has recaptured the presidential palace in Khartoum from a rebel paramilitary group. All the details coming up on that story. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Formal arrest. Turkey jails Istanbul's mayor on corruption charges in a move which could prevent President Erdogan's main political rival from running in the next elections. Lethal strikes. Israel kills 2 members of Hamas's de facto cabinet in airstrikes on the Gaza Strip as tensions ratchet up in southern Lebanon, testing the fragile ceasefire. And tighter focus. President Trump prepares to announce his wave of April 2nd tariffs targeting countries which have barriers on U.S. goods, but excluding some nations and blocs. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Green on the screen behind me, these S&P futures leaning towards positive, up 0.2%. Better close to Wall Street last week. We had the majors ending positive for the week and a rare outperformance versus European equities for 2025. So that happened last week. This week, the narrative will be focused on, of course, anything to do with developments around tariffs, but also the data today. We have the PMI manufacturing numbers and PCE to watch out for later in the week. So all that is coming. We have Euro stocks futures in Europe also leaning towards positive, up around 0.3%. No doubt they're keeping a track as well on those discussions vis-a-vis the ceasefire that are taking place in Jeddah this weekend, though they are more low-level sort of technical discussions that are taking place, so unlikely we get a major breakthrough. 10-year yield sitting at 4.28, a couple of basis points higher today in trading, and then Brent just shy of $72, down about 0.3%. There, investors keeping a close eye on fundamentals, the impact that tariffs could have on global growth, in addition to OPEC Plus bringing back supply as of next month. As for Asia, this is the handover, pretty mixed, I would say, well, leaning towards red now, but we had marginal positive activity out of the Chinese index. Some of those tech stocks in focus today. Remember, we have BYD earnings, Tencent earnings to watch out for, so keep an eye on that set of earnings coming later today. Hang Seng slipping towards the red, down 0.2%. Nikkei trading flat, and then a continued underperformance in the Indonesian stock market, down 2.3% today, after its underperformance last week, again on political developments over there, and some of those decisions by the government spooking investor sentiment towards Indonesia, and also making it a lot more difficult for some of the local corporates to fund in dollars. So keep an eye out for developments in Indonesia. As for another chart that I wanted to show you this morning, this has sort of been a theme for the last couple of months, especially since that DeepSeek arrival shocked the world a couple of months ago. But you can see clearly from this chart that we have seen a huge outperformance of those so-called 8 biggest Chinese tech stocks versus the Magnificent 7 stocks in the U.S. And remember, last week we were talking about the fact that all of those Magnificent 7 stocks are trading negative or close to flat for the year now, whereas the China Tech 8 continue to perform quite well, albeit with a bit of losing some steam, some momentum towards the end of the week last week. But for the year as a whole, the theme has been Chinese tech outperformance. Now, Bloomberg has been told that President Trump's incoming wave of reciprocal tariffs may have a narrower approach than the broad-based barrage he has previously threatened. For more, let's bring in Bloomberg's Bill Ferries. Bill, what do we know about what could be applied on April the 2nd? It's shaping up to be a really important day for markets.
Yeah, it's one markets are on edge for, and Donald Trump is calling April 2nd, quote, Liberation Day for the U.S. and the U.S. economy. This is going to be likely the broadest set of sanctions he's instituted since taking office in January. But whereas a few months ago or even a few weeks ago, we were talking about the potential for tariffs on every single country that had tariffs on U.S. goods, many of his advisors and aides now trying to downplay some of that, suggesting it will be a narrower list of countries affected. We don't know at this point how narrow. But if you look at the list of countries that he's talked about in some of his meetings with reporters and with foreign officials, certainly countries like Canada, Mexico, China have already been hit. They are likely to continue to be on that list. We have seen him talk about many EU countries. He's talked about South Korea. He's talked about India. So still some very significant trade partners of the U.S. kind of sitting on the edge of their seats waiting to see what happens on April 2nd. But it does seem like that universal wall of tariffs that the president was talking about at one point, whether it was in the low digit percentiles or higher, that will not be completely universal at this point.
Yeah, you've got to wonder whether it is the difficulty of implementing that broad-based tariffs idea that is going to be instrumental in moving away from perhaps what they had originally planned, or whether it's market volatility and the fact that some people in the market still think that Trump is watching these stock market indicators quite closely. There's a so-called Trump put that has yet to be activated.
Yeah, and it could very well be both of those things you just mentioned, Jumana. I mean, on the one hand, as soon as President Trump announced these intentions for what he called reciprocal tariffs on every country, it became clear how complicated that would be to enforce. You have to look, any country might have a wide range of tariffs on a different set of U.S. goods. And President Trump also said he wanted to go after non-tariff barriers to trade. So calculating a number that would address those kind of discrepancies would be very difficult for any one or two countries, let alone the whole globe. And then, as you mentioned, what's the pain point here? We've seen the markets really shuddering at the prospect of slower growth, of higher trade tariffs around the world. So far, the president has said repeatedly that he's not watching the markets. We know from his first term that he watches the markets very closely. It may just be that the markets haven't hit that pain point that makes him and his administration reconsider some of these measures.
Yeah, and this is all before April the 2nd. Already you're starting to see some of those decisions to have an impact on the trade data. I was just looking at the numbers, the exchange of trade or the flow of trade between China and U.S. this morning. You can already see a drop-off in certain sectors, similar theme playing out in Canada as well. And then there's also talks about many countries around the world looking to front load before this tariff April 2nd deadline. What does that all mean for, say, central bankers who are watching all this and trying to determine a narrative about what to do next in the second half of the year? Do they focus on growth or do they focus on inflation?
Yeah, that's the big question. They have a lot of uncertainty facing them. Are these kind of tariffs that are coming in or likely to come in, is that going to significantly slow growth so that central banks need to think about that part of their mandate and accelerating cuts perhaps or going from holding to cuts? Is it going to perhaps push inflation up as prices rise, as you have tariffs responded to by counter tariffs in other countries? So how is that all going to come out for central banks? That's a huge question, and which you got to mention April 2nd. Just a couple days later, we'll be getting that key April or March U.S. jobs report. That's going to be something that people are wondering about. How are companies responding to this in the weeks leading up to this Liberation Day, as President Trump calls his new set of tariffs?
Yeah. Bloomberg's Bill Ferries in Singapore. As ever, thank you for helping us make sense of all of these headlines, Bill Ferries. Now, Sudan's army has recaptured the presidential palace in Khartoum from the rebel Rapid Support Forces paramilitary group. Despite soldiers celebrating the symbolic victory, fighting has continued, with a drone firing a missile at the palace, killing soldiers, journalists, and civilians. For more, Bloomberg's Ndiro Ganga joins us now. Ndiro, talk to us about the significance of the recapturing of this presidential palace. And what does it mean for the future of fighting in Sudan?
Hi, Jumana. So there's several layers to this significance, one of them being that the army is gaining mileage over RSF by not only capturing the presidential palace, but also taking back the central bank and the National Museum. The other significance is strategic. They can use this as a nexus point to convert their troops and start pushing south against RSF. On the other hand, RSF will be counting its losses. They released a statement saying that they're fighting bravely to liberate all the parts that have currently been occupied. But all is not lost. They currently still control parts of the city, including the airport, and what they have signaled is they're going to try and protect the towers that they hold, and they'll not be letting go anytime soon. This has seen the bombardment increase, and citizens are reporting that there have been various fatalities, and we've seen RSF deny that drone attack that they are being accused of, and this can be attributed to a couple of things. They're external players that have come into the fighting. Left to RSF and the army alone, they couldn't have used their resources to fight this long, and the casualties would not be as many as we're seeing. But you have UAE backing RSF, giving them money, giving them weapons, and you also have Iran backing the military. And so this has intensified the fighting and given them the momentum that they need to keep going with this fighting. Are we likely to see it change the direction of the significance, or in terms of just shaping up how the fighting will take place? No, because you have on one hand RSF that has made it very clear that they have ambitions to continue expanding their territory and govern the country. And so the army might be a little bit hesitant to trust them with a Libya-style split because they fear that they could go back to the drawing board and come and attack more strongly.
Yeah, and of course, people may forget this, Ondiro, but the war has been going on for 2 years now. Thousands, hundreds of thousands, I believe, of people have been killed in the infighting. How does the war in Sudan compare to some of the other conflicts, both regionally but also globally?
Joanna, we've seen several coups in the region, 9 to be particular, and they've all been characterized by the military saying that they're not happy with the way the government of the day is leading the people, and so they topple the governments. But also when they take power, they've been characterized by power wrangles within their ranks. They've been characterized by intensified fighting, but also immeasurable human suffering. You mentioned Sudan, 150,000 people lost their lives. 12 million people have been displaced. 48 million people are in dire need of food, and these are people that are crossing the border and going to countries like Chad and Niger that have their own political instabilities and also economic vulnerabilities. And if we contrast it to what we are seeing in terms of war on the global landscape, they're not getting the same attention, neither are they getting the same intervention. We're yet to see the right amount of pressure placed on both leaders to bring them to the discussion table. What they've received as sanctions that are barely a slap on the wrist. In terms of aid, they've received 1,000 times less aid than what is going to other parts of the world, for example, Ukraine. And this just goes to show the inequalities that go into things like war in the region.
Yeah. Thank you for bringing us that report. Ondiro Ganga in Kigali, Rwanda. Thank you so much. And coming up, the UK government to investigate the Heathrow blackout. We discuss the unprecedented power failure next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. London Heathrow's unprecedented blackout on Friday has put the airport's reliance on potentially vulnerable infrastructure into focus. The UK government has since commissioned an investigation to look into the incident and to improve the UK's energy resilience to prevent similar outages in the future. For more, our aviation reporter Danny Lee joins us now. Danny, so pretty unprecedented shutdown of Europe's largest airport on Friday. What is the state of play now? It looks as though Heathrow has fully reopened. How are things looking as we head into this week?
Yeah, London's Heathrow Airport finally resumed operations on Saturday, and the numbers that we've looked at from the industry data shows that by Sunday only 2 cancellations out of over 1,300 flights, which is clearly a remarkable turnaround from what happened on Friday, where over 1,100 flights were axed from a fire at an electrical substation which plunged Heathrow Airport into darkness. And so the vulnerability of one of 3 substations that powered Heathrow to be pulled down and to basically shut down the entire airport, it does raise questions about the vulnerability of a critical piece of UK infrastructure, and for an airport that connects people all around the world and is the main gateway for the UK. So clearly very pointed given this incident, and it really does put Heathrow into a bigger focus given the focal point of potentially getting a 3rd runway in future. The fact it has got the government support, and now this has happened.
Yeah, and lots of questions about whether it's actually ready to take on that extra runway. What actually has been the business and political response to Friday's outage?
Yeah, as you said at the top, there is an investigation being commissioned by the government into finding out what had happened exactly and to try and prevent any repeat incidents around this. And particularly when you look at Heathrow and the reliance airlines have on the airport being up and running, There are some concerns and some frustrations being aired over why Heathrow was down for so long, why it took them so long to open up again, and just the idea of the fire taking out the entire airport as well. So many questions from many quarters, and the inquiry has only just begun.
Yeah, Bloomberg's aviation reporter Daryl Liew, thank you so much. Such a unexpected story, I would say, to end the week last week. Thank you for bringing us all of the developments there. Now, Boeing has won a contract to design and build America's next-generation stealth fighter jet, beating out rival Lockheed Martin. The sixth-generation F-47 will replace the F-22 Raptor and is expected to cost hundreds of billions of dollars. The jet is set to operate in tandem with drones as the U.S. tries to keep pace with China's air defense and electronic warfare systems. And coming up, time for some luxury. Swiss watch exports to the Middle East jump a whopping 53% in 2024. We look into why next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumana Bersachi in Dubai. Swedish retailer IKEA says it's looking for new ways to manage costs and be more resilient amid the global trade war. Inter IKEA Group CEO John Abrahamsen Ring spoke to us at the China Development Forum in Beijing.
We believe in a global, regional and local supply chain, and that we have been done for many decades. We have worked with that. We are 87 years old as a total IKEA, so we have a very long-term perspective. We are not a public company or anything like that, so we don't have to worry about the next quarter or the next year. We think decades at IKEA, so we are continuing to build the right structure based on what we do. With that said, we do believe that open rule-based trade is something very positive for the world, and it's been very sort of positive also for IKEA, of course.
So what are the main discussion points, though, in the boardroom when you talk about building in supply chain resiliency? We had supply chain challenges, obviously, through the pandemic. Now it's because of a trade war.
Yeah, but as you said, we're constantly looking at how to become even more resilient, and I think this regional approach is actually benefiting us. So to supply 75% of what we sell in Europe, and to supply 80% in Asia, for Asia is very good, and now we're building up also capabilities in Americas, and that we have been doing for the last decade. We have opened more markets in Americas. We've opened Colombia, we've opened Chile, we've opened Mexico. We continue to evolve our business in Canada and the US, and of course we will continue to become even stronger also as a region in Americas.
Yeah, so how do you keep the costs down when there's so much uncertainty on raw materials and sourcing of the products?
Yeah, we continue to. The main driver of cost, or an opportunity for reducing cost, is to grow in volumes where you can scale on fixed costs, and that is a real key enabler of that, of course. Then, of course, in all the transformations we are doing now with environmental and sustainability intentions, also has to come with even lower costs. If sustainability becomes more expensive, it will have very little effect for the world and also benefits for IKEA. So we are looking into even smarter ways of utilizing raw material, finding ways of circular flows that when you scale that can become very...
that means recycled material.
Exactly, recycling. But that has to also happen on scale. So for recycling, it's a lot about identifying, being able to trace material so that you can use that in a way, and then you have to find a scalable model of how to do it, and that is a lot of progression in many industries, etc., but also in home furnishing.
Inter IKEA Group CEO John Abrahamsen Ring speaking to our Chief North Asia correspondent Stephen Engel in Beijing. Well, let's turn to luxury timepieces, which are having a bit of a moment in the Middle East. A buyer frenzy has seen Swiss watch exports to the region jump 53% in 2024, driven by wealthy locals and expats. For more on the demand, we're joined by our Money and Power reporter, Alex Stuhler. Alex, I loved this story on the terminal over the weekend, especially because it seems as though one of the watches, or at least a couple of the watches that were bought, sold for as much as $240,000. That is a lot of money to spend on one luxury watch. But it also just showcases how within an environment of a difficult trading environment for luxury watches, the Middle East actually stands out.
Yes, yeah, for sure. I mean, it's super interesting. So if you look at the global demand for Swiss watches, it's down by around 2% last year. In the Middle East, it jumped 53%. So if you go to Dubai Mall, there's a huge demand for luxury timepieces. We interviewed the CEO of MBNF, where they were selling watches up to $240,000, and they were shipping in more from Geneva. So the demand is really strong in the Middle East, but it's worth stating that it's still a pretty small market for the Swiss luxury timepiece market.
Yeah, well, this is what I was going to say, right? So many of these luxury players have really felt the weakness and the slowdown come through from Chinese consumers. To what extent can the Middle East compensate for some of the sales that have been lost in China? Or is it still a drop in the ocean compared to those larger markets?
Yeah, no, I mean, it's a great question. I mean, we pointed to Swatch Group in the piece, and I think last year profits dropped 75%. So China's a huge market for these watch companies, but it's still pretty small. So if you look at total export of Swiss watches to the Middle East, it's around $4.4 billion. Asia, they're exporting $13.8 billion. And globally, they're exporting around $29.4 billion. So the Middle East is still a small market, but it's growing in importance. And I think that's what I definitely emphasize there.
And who are the buyers? Are we talking about locals, or are we talking about some of the expats who now reside in Dubai? One of the other big themes that your team covers is just the influx of wealth into Dubai and the UAE as well.
Yeah, no, so it's really interesting. I think I would say it's both. So in the piece, we interviewed a prominent Emirati businessman who collects a huge array of interesting and quirky timepieces, but it's also an influx of wealthy expats. Dubai is very safe, tax-free income, and there's almost a status-conscious culture in the Emirates at times. So that's definitely fueling the expat demand for luxury timepieces.
Yeah, so interesting. And also in the article, you talk about Cristiano Ronaldo rocking up wearing a $870,000 watch when he signed with the Saudi football team. So maybe there's a bit of a celebrity influencer culture phenomenon going on as well. Thank you to our money and power reporter, Alex Duller in Abu Dhabi. Now, Pope Francis has made his first public appearance since hospital treatment for double pneumonia. Sitting in a wheelchair, the 88-year-old thanked and gave blessings to well-wishers gathered outside Gemelli Hospital in Rome. Pope Francis has returned to his residence in the Vatican, where he'll convalesce for the next 2 months. And a quick look at equity futures before we head out. Things leaning towards the green as we head off to the rest of the trading week. But that was it for our show today. Horizons Middle East and Africa for this Monday. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.